Market Call continues. Hello again. I'm Michael Hainsworth in for Andrew Bell all this week. He will be back next week, and it is the holiday season, so please hold your complaints. 1-855-326-6266 if you've got a question for David Burrows of Barometer today. Kareem does. He's in Montreal. Hello.
Good afternoon, Mr. Hainsworth. Thanks for taking my call.
Thanks for calling.
Mr. Burrows, I'm calling about Rio Tinto. I actually just took up a position recently. I realize I'm late to the base metal bull run. I heard your comments earlier on tech saying you were bullish from what I gather. What do you think of Rio Tinto going forward? Thank you.
All right.
So Kareem, in Rio Tinto, you're getting a big diversified metals company. Their biggest exposure is to iron ore, really with global exposure. China's about 40% of their revenue. So you're making a little bit of a call on China. China seems to be improving. Look, I think that the materials should be a piece of a portfolio right now. Realistically, I think that in our equity portfolio, we're about 8% materials.
That's overweight.
So yeah, it is overweight, and we have virtually a zero weight in utilities and telcos and REITs. So we are cyclical in nature right now. I think this is a great position. Clearly, you want to continue to see it play out. You want to use a stop on the position. But I think that you're going to continue to see little pullbacks, and these stocks will participate going forward.
When you talk about using a stop loss position to protect your upside here, it's at $41.02 today. How would you go about, for someone such as Kareem, who doesn't make this their day job, to have a stop loss position that doesn't accidentally get you stopped out if you have volatile times?
Right. So you have to look at every security differently and look at sort of where the pullbacks can come to. Some people like to use a 50-day moving average. The problem is everybody watches it and they very often dip below. As an investor, I probably would use the 150-day moving average. I like to use point and figure price charts. Not everybody knows how to use them. I encourage people to go and learn about them. They're a great tool. I've used them for 25 years. They help to recognize inflection points where a trend is changing. But I think that you could use the 150-day moving average as a pretty good indicator as to where a pullback is ending and a reversal is beginning.
And you could use that as an electronic stop, or do you want to write that on a whiteboard?
Well, I think that I'm a big believer in having hard stops. So our trade desk, if we're getting towards one of our exit points, they start figuring out how they're going to execute it.
Kareem, thanks for the call from Montreal. Woodbridge now for Tony. Hi, Tony.
Hi, thank you for taking my call. I've been trading for 40 years, and I'm actually opposite of what David was saying. I'm completely bearish. I've never been so bearish in my life. Actually, I think there's a different temperament now with the market and the way the economies are working around the world. When you have 800 points down before Trump gets elected to a 300-point gain when the market opens, to me, that tells me that there's some outside influence that's coming into the market. Now, it might sound conspiracy theory, this and that, but it just seems there's so much uncertainty in the world, and the market still continues going up for no apparent reason. The high valuations is ridiculous. So I'm involved in gold. The only thing I bought is gold. It's the only thing I own right now, and it's Gold Corp, because the down risk is very little. And it's hard to predict a crash, but let's face it, if I hold for 3 or 4 or 5 years, Gold Corp's eventually going to trade at $70, $80, $100, who knows? Because gold is going to take off. But anyway, I'll hang up and listen to what you have to say. Thank you.
Thanks for sharing. What do you think of Gold Corp?
Look, Tony, I won't argue you may be right someday. At this point, there is no indication to me that the group is leadership or even beginning. There's lots of time to enter a new position when you get real evidence that positive change is taking place. At this point, there's really not much. Gold Corp is trading worse than 88% of the stocks in the TSX over the course of this year. It's not showing any signs to me of reversing. So as it stands right now, I think, for a trader who's trying to buy a year-end bounce, I can see that. I wouldn't be buying this as a long-term hold or a long-term buy at this point. I'm short gold stocks right now in our global macro portfolio and have been for a few months. On the other side, I think there's very clear evidence economically, in estimates, and in market participation that money's getting put to work in equities, and this could go on for some time. The only last thing I want to say is, for people who say, what about the 800 points overnight, the night of the election? We've had 3 or 4 big events this year, all of them worried about by lots of people for a long time into the event. And in each case, it wasn't enough to make the market go down. That tells you how resilient this market is. It's no outside influence. It's just cash that's stranded on the sidelines. And when the market started to rally, they had to start chasing. So at this point, I wouldn't fight the tape. Market looks like it's going higher, but I would be a little careful with the gold stocks if you're looking for leadership in the market.
From the It Makes a Market file, street consensus, so I got 2 out of 3 analysts with a buy recommendation on Goldcorp, and the consensus is that it's going to be about a 48% return over the next 12 months.
Well, I hope, Tony, for you that it is.
Thanks for the call from Woodbridge. We're taking a brief break. When we come back, David Burrows, President and Chief Investment Strategist at Barometer, taking your questions on North American large caps. Call us toll free, 1-855-326-6266, toll free right across Canada.